If you could speculate the ideal portfolio performance, like what would be in it right now in 2030?
I see there's no way around negative real rates over the next 6 to 7 years. Higher inflation is inevitable because we're going to have to print our way out, inflate our way out of the debt crisis. We have a debt crisis, we have a credit crisis, and then so if there's a bond crisis and a debt crisis, there's going to be a currency crisis, there's going to be a debasement. So I want allocation to hard assets. Obviously, I'm very biased towards precious metals, less towards Bitcoin, not anti-Bitcoin, but for the type of portfolio that I would want, it's going to be more weighted towards precious metals in general and gold in particular. Perversely, I think when we have rate cuts inevitable and more inflation, equities could continue to have a tailwind. We have to keep in mind we're looking 7 years out in the next 6 weeks. But the irony is with equities in an inflationary scenario, then it's okay, how do you pick those equities? And I would stay away from the version of the Magnificent Seven right now. I think they're massively overvalued and they will continue to be. I would look for better value. I was reading the other day about something, the current S&P is trading at 7.5 times the global equity index. So we're trading 7.5 times greater than we already are in the rest of the world stock markets. And yet that can still go higher, especially in the next 10 to 24 months if we do get the rate cuts that I foresee and projected. So I would look for value. I do think there's going to be more reshoring, not just make America great again, but there's going to be reshoring of manufacturing, which we've outsourced really for decades. America's going to have to make a choice, Canada too, to reshore manufacturing. We've outsourced the American dream to China since 2000. And so I think there's an opportunity there to pick good industrials. Like Lou Groman, I see a good play in even the infrastructure for electricity. That's certainly with the Bitcoin, so that would be necessary, but for other reasons too. I would definitely have that type of allocation, definitely with inflation in mind. And also keep in mind, and this is the former naive hedge fund manager of the dot-com era, and the things I learned in the dot-com lottery ticket win I had on IPOs, and another thing I learned in the crisis in 2008. It's not just your sexy stock, your sexy sector, your sexy pick's gonna be lucky or intelligent. It's how you manage that portfolio. And the one thing, when I hit that lottery ticket, was a family office guy and then merged with other family offices, there was always a debate about what's your goal. Keep beating Jeremy Siegel's 8%, keep beating inflation, return. At a certain point, depending on where you are in the spectrum, it's also preserve, protect. So you got to think about what's your goal. I'm not against speculation. I'm not against reaching for more return or yield, but it's going to be a dangerous world to find yield on that risk branch. You got to be careful. So the lesson I learned from allocating to much better portfolio managers than I was, 3 biggest risks I think in a portfolio is overconcentration, and whatever that asset is, no matter what you're biased, there's a massive risk and concentration risk. Leverage is a major risk. Be careful of your own use or your manager's use or your expert's use of leverage. And timing risk. I know we're trying to project 7 years out, but it's very hard to time a move. And so you want to have a portfolio that addresses those key risks. So it's not just what, it's also how. But clearly the inflation theme is on our mind. I want assets that can't be created out of thin air, basically, and can't be manufactured out of nothing. As a European American, and the stories of World War II and the grandparents and their grandparents, even before I even understood protection and understood preservation as a key goal, it was always gold, land, art. It's kind of a joke in Switzerland, but it's actually not so funny now. And I think there's other things we can think about as assets that can't be manufactured willy-nilly. Reshoring or other opportunities in emerging markets or outside of the U.S., demographically speaking, once we get past a global recession, countries like Mexico, India, they have a great demographics. There's going to be opportunities there. Again, you'll have to wait and see where the signposts are, but in general, we got to be looking outside the U.S. But I also think, I grew up in Michigan before I went set off to Germany and before I married a French woman. But, I'm a patriot. I'm a Midwestern. It's simple, stupid, but I've seen what happened in the Rust Belt, they call it. My grandfather worked at Ford. I saw what happened to Detroit, to Flint, the Midwest in general. I do think it's not only morally and professionally and nationally essential, I think it's economically essential that, when we outsourced the American dream in 2000, 2001 under Clinton, that we bring those jobs back. I think it still has to happen in America. I think whoever's in power, left or right, red or blue, or anything in between, it's pretty axiomatic that you can't have GDP without without production. I'd like to see that actually come back instead of just being a service economy that inflates its debt away with bogus currency. Inflation drivers are going to be, to me, that's the Milton Friedman school. Inflation to me is ultimately about money supply. It's ultimately about currency and whatever we call our currency. I don't see a gold-backed US dollar in the next 7 years. I just see a very different understanding of the value of that fiat, peso, won, yuan, US, Canadian, Australian dollar. So again, when you're measuring your portfolio with a 20% return or an extra million or an extra 100 or an extra 1,000, it won't buy as much in 7 years as it does today, and it certainly doesn't buy as much as it did 7, 10 years ago before. And I'm not trying to be flippant, I'm not. $1 million isn't what it used to be when that was the goal, to be a millionaire. Sad world where $1 million isn't really much anymore, and yet it's very important to think about that.
Generally speaking, do any stand out to you on emerging markets that you're most bullish on?
Two that stick out are Mexico and India in particular. And again, not too loved all the time in the media and misunderstood.
And is that based on demographics and something else, or what are you looking at?
Well, just the age of the population, right? Who's going to be the buyers? Who's going to be phasing out? You know, there's been some cryptic comments about even in the U.S., there's massive amounts of baby boomers with massive amounts of money that theoretically, if they were to die at the right time in the next 4 years, that would be a huge wealth transfer to the second generation, which is much younger. They'd spend, there'd be more productivity. That's a dark thought. It won't happen. When I talk about the domino effect, when you have debt crisis, then you have a bond crisis, then you have a currency crisis, but the fourth thing you have, without exception throughout history, is centralization crisis. That means extreme political reactions from the left or the right, whether that's lockdown, censorship, weaponized currencies, weaponized media, weaponized science, etc., weaponized Department of Justice, etc. You know, pick your argument, pick your bias. I see that as another force. That can be nationalism, that can be protectivism, that can be tariffs, that can be other things. In addition to demographics, it's the unspoken but happening in plain sight right now, real-time threat of a more centralized state. What does that mean for our freedoms, our liberties, our thoughts, our currencies? Without getting into CBDC or Bitcoin versus gold, our liberties, and to Rick's point, which is extremely important, our understanding, the best asset is understanding something. And as we were talking about earlier, Henry Ford said many years ago, if the world understand how banks worked, fractional reserve banking, Federal Reserve, there'd be revolution. We would be a far more savvy, we would put more boots to the necks of our politicians who aren't being transparent. Failing that, my biggest fear is in demographics is centralization, of which the evidence around us is already too abundant.